You've decided you want to invest. You've even learned about powerful tools like ETFs. But now you're facing the most common roadblock for every new investor, a wall of confusing choices. Fidelity, Vanguard, Robinhood, Schwab. Which one is actually the best? And what's the real difference? Today, we're cutting through the noise. I'm breaking down the 5 best investing platforms for beginners so you can confidently open your account and start building wealth. But first, before we look at specific platforms, you need to know what to look for. When you're choosing a broker, there are 3 key factors that matter more than anything else. First is fees. Look for brokers with 0 commission fees on stock and ETF trades, and no account maintenance fees. Fees are a guaranteed loss, so minimizing them is your top priority. Second is features. As a beginner, the most important feature is fractional shares. This allows you to buy a small slice of an expensive stock, like Amazon, for just a few dollars, instead of needing thousands for a single share. And third is support. When you're just starting, you will have questions. A good broker has reliable customer support that you can actually reach by phone or live chat. Okay, with those 3 factors in mind, fees, features, and support, let's compare our top 5 platforms. Platform number 1, Fidelity. Fidelity is often considered the best all-around brokerage for both beginners and advanced investors. Its biggest advantage is that it checks all the boxes perfectly. They have 0 commission fees, no account minimums, and their customer service is legendary. They also offer fractional shares, so you can start with any amount of money. Their website and mobile app are clean, powerful, and easy to use. The only minor downside is that their platform has so many features for advanced users that it might feel a little overwhelming at first. But for the basics, it's very straightforward. Fidelity is best for the beginner who wants a top-tier, reliable platform they can grow with for the rest of their life. Platform number 2, Vanguard. Vanguard is the company that literally invented the low-cost index fund. Their reputation for long-term, ethical investing is unmatched. Their primary strength is their laser focus on their own world-class, low-cost ETFs and mutual funds. If your goal is to simply buy and hold Vanguard funds, there's no better place to do it. However, their user interface and mobile app are widely considered to be clunky, outdated, and less intuitive than competitors. They also have a more limited selection of non-Vanguard products. Vanguard is best for the disciplined, long-term, buy-and-hold investor who values rock-bottom costs and reputation above a slick user experience. Platform number 3, Charles Schwab. Charles Schwab is another full-service giant, very similar in quality and reputation to Fidelity. They offer excellent award-winning research tools, fantastic customer service, and a very user-friendly platform. They also have a globally recognized checking account with no ATM fees worldwide, which is a huge perk. Their main drawback used to be a lack of fractional shares, but they have now rolled this feature out, making them highly competitive. Their platform can sometimes feel geared more towards traditional, high-net-worth investors. Charles Schwab is best for someone looking for a great all-in-one bank and brokerage with top-tier research tools and global banking perks. Platform number 4, M1 Finance. M1. Finance is different from the rest. It's not a trading platform, it's an automated investing platform built around a concept called pie investing. You design your ideal portfolio as a pie with different slices. Then, every time you deposit money, M1 automatically buys the right amount of each slice to keep your portfolio balanced. It's the ultimate set-it-and-forget-it tool. The downside is that you have very little control over individual trades. M1 only trades once or twice per day, so it's not for active traders. M1. Finance is best for the investor who wants to automate everything, build a long-term portfolio, and remove the temptation to trade frequently. Platform number 5, Robinhood. Robinhood is famous for its simple, game-like interface that made investing accessible to a new generation. Its biggest strength is its incredibly easy-to-use mobile app. Opening an account and placing your first trade is faster and simpler here than anywhere else. However, it has faced criticism for encouraging risky, frequent trading and for a lack of the robust research tools you'd find at Fidelity or Schwab. It's simple, but it's not powerful. Robinhood is best for the mobile-first beginner who values simplicity and ease of use above all else and isn't concerned with deep research. A simple portfolio example for beginners. Okay, so you've chosen a platform, but what do you actually buy? That's a huge question, so let me give you a classic, simple, and powerful portfolio example to get you started. This is often called a 3-fund portfolio, and it's the gold standard for beginners because it gives you instant diversification across the entire globe for an incredibly low cost. First, a U.S. total stock market ETF, like VTI. This gives you a piece of every publicly traded company in the United States. Second, an international total stock market ETF, like VXUS. This gives you a piece of thousands of companies outside of the US. And third, a total bond market ETF, like BND. This adds stability to your portfolio, acting as a shock absorber for the stock market's ups and downs. A common starting allocation is 60% in US stocks, 20% in international stocks, and 20% in bonds. So if you invest $100, you'd put $60 into VTI, $20 into VXUS, and $20 into BND. But how often should you invest? The best strategy for beginners is called dollar cost averaging. This simply means investing a fixed amount of money at regular intervals, like $100 every month, regardless of what the market is doing. This powerful technique removes the stress of trying to time the market and ensures you're consistently building your position over the long term. It's the secret weapon of disciplined investors. So, what's the verdict? Which one should you choose? While all 5 are great options for most beginners who want the best combination of features, support, and long-term potential, there is a clear winner. My top recommendation is Fidelity. It combines the best of all worlds: zero fees, no minimums, fractional shares, a great user interface, and the power to grow with you as you become a more experienced investor. It is the complete package. But the most important step is to simply get started. Choose one of these platforms this week, open your account, and make your first investment. Knowledge without action is just entertainment. It's time to take action. If you found this video valuable, do me a huge favor and hit that like button. It really helps the channel grow. And make sure you subscribe and turn on notifications so you don't miss future videos where we'll dive deeper into building wealth and mastering your money. Now, I have a question for you. Which brokerage platform are you using now? Or which one are you thinking of choosing? Drop a comment below and let me know. Thanks for watching, and I'll see you in the next one.